Hey guys, welcome to another one of our videos. What I want to talk about today is mortgage rates and what determines them. So, look, there's a lot of mixed messages out there in the media, and often it's really confusing about, what the hell's going on. So let's take a bit of a look at that. The first thing to think about is inflation, because ultimately inflation drives interest rates. And what you'll hear me say quite often is that we're in a world without inflation. Largely driven by how quickly innovation and technology is occurring and the changes that it's making. Nowhere is that more prevalent than with oil and what's happening with cars in terms of electrification, but also renewable energy in terms of solar power and all that sort of stuff. So there is no inflation out there, and inflation is a driver of interest rates. So fundamentally, interest rates are going to stay low for the foreseeable future. The other factor that plays out is how easily banks can borrow money themselves. Now, the reality is the world's awash with cash, so the banks could very easily and very cheaply borrow money from offshore. The problem that they have is that the Reserve Bank doesn't want them to do that, because if they borrow too much money offshore, it can create instability when things go wrong. And you saw that during the GFC. So what's happened is the Reserve Bank very much restricts banks from raising money offshore. They really want to see the banks funding their lending books with domestic deposits. And those restrictions are what are driving up bank funding costs. So on the one hand, you expect interest rates to stay very low for a long time, and on the other hand, bank funding costs are going up because the Reserve Bank is forcing them to borrow that money domestically off Kiwi savers, of which there's not a lot. So that's basically what's driving interest rates. And when you sort of see what's happening in the market, we've got a little bit of an increase occurring in the rates, not much, and to be honest, that's probably the extent of what we'll see, and that's driven by banks' profitability under pressure and them looking to extract a bit of extra margin. But what we're also seeing is high levels of competition that's managing to keep those rates still at very low levels. So at the moment we've got mortgage rates in the high fours, and I can't really see that increasing much from here. So that's it from me. Talk to you next time.